So here's just a quick example of how you could use order blocks for entries. So typically this is on the 5-minute time frame, and this is for daily scalps. So how I usually do this is, if I'm using fair value gaps, I wait for a market structure shift with fair value gap inclusive, then I'll take my entry at that fair value gap. But for an order block, you want to be either at a point where liquidity has been taken at a fair value gap, larger time frame fair value gap, or within an order block, which is fine. So in this case, I was looking for buys because I was bullish on today, Monday. So if I was using my fair value gap, I would have waited for this high to get taken out, which we did right here. We had a fair value gap, my entry would have been there, and I would have gotten my 20 pips for the day out of this. But because we are talking about order blocks, I would have to have been down here. So I knew we took liquidity out here. We had some equal lows. We took liquidity. So what is the last bullish candle? This one here. I'm gonna draw it out. It also has a fair value gap included next to it, which is always a plus. Means it's a high probability order block. I'm not so sure if that candlestick tapped into this, but let's see. We barely tapped into it. We missed it. Okay, but we did come back around on this end. Now, if you weren't too confident on this side, what you could have done is you could have waited for another fair value gap to be formed, and then you could use my goodness, you could have waited for another order block to be formed and then use that one. So from where I stand, I'm looking at two order blocks. I could have used this one here, draw it out like that. That candle closed above the body there, and my entry would have been right at this line right there. So this candle here would have tagged me into the trade. I would have gone up. If you wanted, you could have used this, but I don't know if we get a tag on this one, do we? Yes, we do. So you could have used this. So you could have drawn a line at the body of that, push it to there. That candlestick closed above the body of the bearish candle. My entry would have been on this candlestick right there. Then would have seen it go higher. The reason I use fair value gaps is I like to see market structure shifts, because that gives me more confidence to say, okay, we might not be reversing, this might be bullish for the day. Alright, thank you very much for watching this video, and I will see you in my next one.